You're listening to AI Prism from Seoul Economic Daily.
SK Hynix just dropped a massive bomb on the market, filing for a NASDAQ American depository receipt targeting roughly 45.9 trillion KRW, which is about 32.8 billion USD, entirely to fund their fabrication infrastructure. So as an executive listening to this, the immediate question you need to ask yourself is if this massive capital move forces a board-level decision on your own operations in Korea. It's Thursday, June 25th. Let's look at a business story shaping corporate Korea.
Yeah, I mean, it really is a staggering amount of capital. SK Hynix filed that ADR targeting 45.9 trillion KRW, or 32.8 billion USD, specifically for the Yongin Phase 1 and Cheongju fabs.
Right.
And this strategic action aims to double monthly wafer capacity to 1.1 million by 2030.
Right.
But, to truly grasp the stakes for your supply chain, we have to look at the friction happening on the ground when you try to scale infrastructure that fast.
Right, because SK Hynix isn't the only giant trying to build out. I mean, Samsung has their own massive plans in the region, don't they?
Exactly. Samsung's 360 trillion KRW, or 257 billion USD. Yongin Complex has only achieved 33% land acquisition.
Wait, let me just stop you there.
Yeah.
They've budgeted hundreds of billions of dollars, but they don't even own half the land yet.
Correct. And land isn't even the biggest bottleneck here. The government's accelerated policy timeline leaves a critical 3 gigawatt power supply gap against a 14.8 gigawatt requirement.
Wow. So it's like they're trying to build a state-of-the-art mega mansion, but they don't even own half the land yet, and the city hasn't approved the power lines to, turn the lights on.
That's a great way to put it.
It's a massive local bottleneck. But how does this localized friction in Korea translate into a global risk calculation for a CEO listening right now?
Well, Korea's infrastructure bottlenecks directly constrain the global AI stack shift. Intel shares have tripled year-to-date to 185,000 KRW, or 132 USD, alongside Nvidia's Vera CPU entering production in fall 2026.
Okay, so a huge demand spike.
Exactly. The world is racing to build next-generation data centers, and those demand memory chips. But we've already seen how fragile this local-to-global bridge is, like with Micron's 13% drop on June 23rd.
Which was triggered by those Korean leveraged ETF liquidations, right?
Yes. When highly leveraged ETFs in Korea tracking semiconductors are forced to liquidate, they rapidly sell off assets to cover debts.
Makes sense.
Right. And because memory makers trade in tandem globally, algorithms see that massive sell-off in Asian markets and immediately dump related U.S. equities like Micron to hedge risk. It proves that local market mechanics in Korea create systemic risks for the global AI trade.
That is fascinating and honestly terrifying if you aren't prepared. So getting to the bottom line for the boardroom, what is the ultimate takeaway here?
Recovering that 32.8 billion USD SK Hynix hook, with over 70% of global DRAM originating from Korea, your supply chain reliability from 2027 hinges entirely on Yongin Phase 1 delivering on time. You must factor these present-tense execution constraints into supplier redundancy planning today, while adjusting data center capital commitments for the 2028 CPU-GPU co-optimization cycle. Finally, you need to watch the upcoming #KOSPI governance disclosures targeting companies below the 0.3 times price-to-book ratio threshold.
That's today's AI Prism CEOs. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a One Eye for Eye award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.